midweek edition of Business Morning on Channels Television. Good morning and welcome to the day after so many economic decisions were taken in Nigeria. And you know, here on Business Morning, we're going to focus on those, at least touch on them on some parts of the program. I'm eNaira. Let's start with what I was doing all through yesterday. Yes, yesterday I was at the CBN headquarters. That's where, in Lagos, that's where the MPC met for this month of July. The bi-monthly meeting was in Lagos, and I was there to cover it. I know some of you caught it out, but this is the report of how the MPC decided that the MPR has to go up by 100 basis points from 13% to 14%.
Advise you. You may go to your bank.
It's the office of the Central Bank of Nigeria's governor, but this time in Lagos State. It's the first time the MPC is meeting here since the regulator moved its headquarters to the Federal Capital Territory. But this does not change the unpleasant fact that economic parameters are not at its best.
It's almost costless, at least today.
At the May MPC in Abuja, the meeting adopted a hawkish stance, joining the rest of the world to hike the monetary policy rate. It went from 11.5% to 13%. Since then, inflation has moved from 17.71% for the month of May to 18.6% for June, a major consideration for the MPC. There's also the huge supply disruption occasioned by the ongoing war in Ukraine and fueling energy costs.
MPC did not even take any look at the issue of whether to hold rates constant or to loosen, because we know some people would have expected that having tightened last time by 150 basis points, some of the analysis we've watched or read is that, look, we should not continue to increase rates because it will increase the cost of borrowing, cost of borrowing by borrowers. It may also weaken manufacturing output and the rest of them. We agree, and I believe, and I want to signal, the Monetary Policy Committee is very determined that if inflation continues at this rate, particularly aggressively, we would continue to tighten.
The CBN governor did not mince words when expressing the stance and future decision of the MPC. But even before now, economists have been reacting.
We've been having conversation of what is the assurance that increasing interest rate will actually deal with inflation and not cause a stagflation in the economy. But the MPC has said that it's also taking into cognizance the fact that the CBN is working on developmental financing, and that should be able to balance it.
Finding a balance is the motivation for the CBN's disbursement of 741 billion naira loans so far for the developments in agriculture, 130 billion naira to 176 hospitals, and rebate for the second quarter of 20 billion naira to exporters through the RT 200 program, which according to the regulator has generated about $3 billion as of June 2022.
The limit to what the monetary policy can do, the limit to how much you can use monetary policy to fight, the ills or correct the ills in the economy. What they can do, like I said, is looking at things like interest rates and trying to think of the currency. But it doesn't solve the problem. If you don't get the fiscal side of things correct, then you're going to continue to struggle with your monetary policy. Even if you were to raise rates today to, say, 20%, it doesn't necessarily guarantee you inflows coming into the country, because people who come in would still struggle to go out because you have issues on the currency side.
While some economists may not agree totally with the hiking of rates, the coming days will show how effective or not this approach is in dealing with inflation in Nigeria. eNaira, Channels Television News.
Well, that was a major work for me yesterday at the CBN headquarters. But another major thing that happened yesterday was the commercialization of the NNPC, now NNPC Limited. With this transition, the Nigerian National Petroleum Company Limited will no longer remit money to the Federation Accounts Allocation Committee for sharing to the 3 tiers of government. So what are the other implications of this? We have Idris Arua, energy market analyst, joining us from our Abuja studio for this conversation. Hi, Idris, good morning. All right, I hope you can hear me. Okay, yeah, I can hear you now. Awesome. So we see that one of the implications of the NNPC Limited is that there'll not be remittance from the NNPC to the Federation account for onward sharing. That's another conversation, especially for state governments. But what other implications should we expect from this commercialization of NNPC?
Yeah, with the commercialization, the first thing is that NNPC has become an independent liability company, which is going to operate under the Company and Allied Matters Act. That is, first of all, the primary goal, and NNPC operation will be guided by the Act, CAMA 2020. Now, going forward, government interference in the operations of the NNPC would no longer be necessary. The House committees, the National Assembly committees, the federal government interference will no longer be necessary because the CAMA provides these guidelines under which a company registers under the CAMA 2020 is expected to function. Then, moreover, NNPC Limited is also now a member of the Global Extractive Industry Transparency Initiative, which will make NNPC more transparent. Everything about NNPC will be made public. All the documents are made public. NNPC operations with the government as regards to petroleum import and all the other crude oil services is going to be basically on SLA, on a certain service level agreement, so that NNPC is not going to be, is going to operate just like the way other states, oil companies like Aramco are operating. NNPC will now have the right to dive into other investment interests, take financial decisions, take business decisions, go into contract and how would I say, create the atmosphere for global financial capital investment into the NNPC. NNPC as a corporation, which was incorporated in 2021, September, following the PIA bill, has the primary responsibility of providing energy security for Nigeria. And with what is happening, which is the most important thing, is that service delivery will now be at its optimum best without the usual government interference.
Right, I mean, that's
expected. Is set.
Yeah, that's government interference, you know, is one fear that Nigerians are having, especially when they say, okay, who are those who are still running the company? It's still the same set of people. It's just, you know, the paper change and things like that. But I think one other conversation, if you have been listening closely around you by Nigerians, is how will this affect the supply of petroleum products and the costs? That is what concerns the average man on the streets.
Yeah. Yes. First of all, from the inception of the PIA, and with the coming on board of the new management of NNPC, led by Mr. Mele Kyari, if you observe what has been happening, NNPC have taken some independent business decisions so far. First of all, they've embarked on the rehabilitation and construction of the Port Harcourt refinery with a capacity of 210,000 barrels per day, which is supposed to come full upstream by 2024. They invested 20% into Dangote refinery, to boost the capital base of the Dangote refinery, which should also have the capital of around 650,000 barrels per day. And they've also invested 10% in a new African Petroleum Port Harcourt Limited, which also has capacity of 100,000 barrels per day. All these investment are expected to produce a cumulative output of over 900,000 barrels per day. From available evaluation of Nigeria product and consumption demand, as at April 2022, it was put at 73.5 million liters per day, which accounts for just 616,000 barrels per day local consumption demand. If it stays at that rate, with NNPC producing over, and its partners now, producing over 900,000 barrels per day, so by 2024, we should have energy sufficiency, we should have enough fuel. And some of the issues around pricing, although it's strictly a government policy, pricing is federal government policy, NNPC is just supposed to be the supply available at the cheapest cost. But with that, you have taken away the forex end. Okay. Because that's where the main issues are coming from.
All right, Mr. Arua.
The dollar-naira exchange end, because everything is going on locally.
All right, Mr. Arua, this is obviously an ongoing conversation and expectations are really high. But I think we will hold you to your words. God will keep us alive to 2024, and then we'll see energy sufficiency by then following this commercialization. Thank you so much.
I'm sure I'll be back on channels to celebrate that with you.
Thank you so much, Mr. Idris Arua, Energy Market Analyst, for sharing your thoughts with us this moment. So we'll take a moment. When we come back, we do have other conversations. You're welcome back. Well, one of the major things that happened yesterday, obviously, was the MPC by the CBN, and we're staying around the CBN this time around. We want to see what the regulator is doing when it comes to expanding financial inclusion and digitalization through its CBDC, that's a central bank digital currency. We'll have joining us for that conversation here in the Lagos studio, Mr. Daniel Awe, the head Africa FinTech Foundry. That's him. That's Daniel. Good morning, right? And then we have Dr. Kalipa Nuhu.
Morning.
He's from the CBN. So if you have any CBN questions, please hold. He's the director of IT with the Central Bank of Nigeria. Good to have you both on the show this morning.
Good morning, Ini. Good to be here.
Good to have you. So let's start with you, Dr. Nuhu. Yesterday, even at the MPC decision announcement, the CBN governor, talked about the eNaira, encouraged people to go out there and embrace it, and even warned that the banks might be discouraging people. Please tell us, sitting there at the height of IT in CBN, how was the adoption and usage, not just the downloads,
yes,
but the adoption and usage of the eNaira? How has it been so far?
Okay, thank you for your question. And just a quick clarification, I'm not the director, I'm just representing the director.
Oh.
Director is Madam Rekia, so that's a quick correction. As for the adoption, it's been a long journey so far. You're aware the CBDC, that is eNaira, Central Bank Digital Currency, was launched last year, October 21st. And being the first CBDC in Africa, it has been a learning curve. It's been an extraordinary journey. We've seen a lot of uptakes, we've seen a lot of challenges, and we are moving towards ways to improve the adoption. As it is, we're currently working on a relaunch of the eNaira wallets, both having mobile applications and the web wallets. In terms of challenges, like you've mentioned, they've been where you see people asking us, you've introduced eNaira, where can you spend this money? And it's not just about having a wallet. All this feedback has been taken. And we are doing a lot of work onboarding merchants. That is where people can go and spend this eNaira. We've redesigned the wallets. We've improved the technology to add more features. And like you've mentioned earlier, adoption is very important. And that's why we're here today with Daniel. We've collaborated with AFF to run a hackathon, which is a way of crowdsourcing ideas to solve societal and business problems. So that's one of the major things we've been up to in terms of adoption.
So Daniel, what are you doing for adoption?
All right. Good morning, Ini, and it's actually exciting to be here. And when you look at eNaira from a perspective of innovation, you know, it's been a lot of lack of understanding that people see eNaira as a currency that has to be spent, right? And the concept of eNaira, it's a platform that's meant to solve some problems. And from an adoption perspective, I lead the Africa FinTech Foundry, and what we are focused on is on innovation, solving problems. So we are working with central banks to create use cases to solve real-life problems where people will see the value of eNaira. So from my perspective, our role here is to work closely with central bank to create use cases, to bring in innovators. Nigerians are extremely innovative. I mean, from where I sit, when I hear ideas from people, it shows how intelligent Nigerians are. And so many people have asked questions that I can go on my mobile bank today and transfer money from one bank to the other. So what has eNaira come to do differently? Absolutely, the capability that eNaira will bring in the long run, the normal transfer on mobile app will not be possible. For example, you want to pay somebody in China. You can get on your mobile phone and pay the person directly in his account in China without even going through the banking sector. So those are the kind of capability that eNaira will bring eventually. So from our perspective, we are working with central bank to create those innovations, to bring in those use cases and solve problems that will make the entire financial sector see the opportunity of eNaira.
Okay, interesting, and I'm glad you did ask that question, because even when we've talked about it, a lot of people have asked that, what is eNaira really bringing to the table? Already we do transfers, we do e-transactions and all that. But I guess another area of interest to Nigerians would be the cost. If you say I can stay in Nigeria and transfer and make payment to someone in China, what does it cost me? That might be another area of advantage that the eNaira may be bringing to the table.
Yes, absolutely. The way we transact today, it's quite expensive when you look at the transaction in a global perspective. You want to send money from Nigeria to the US, to the UK, for cross-border transfer, to execute international trade. It's quite expensive. By the time we get to the maturity level of eNaira, it becomes cheaper, faster, more efficient, and you can break more boundaries. You can do things that today it's not possible based on the current fiat currency, which is the normal naira that you can spend on your mobile phone, you can spend in paper, you can spend on the internet banking and other existing channels. By the time we get to the maturity level of eNaira, there are some possibilities that you'll be able to experience just beyond payment, not only on payment. There are some, I can easily tell you that probably some limitations we have today. You do transaction today, it fails, a certain percentage of those transactions fails. When eNaira is fully matured, you can easily tell.
When will it be fully matured?
Well, if you look at it from this perspective, this is an evolving technology. It's a technology-driven payment, and it takes a bit of time. I remembered sometimes in 2003, if I'm not wrong, what we had in Nigeria was people called debit card. They used to call it ATM card. And the reason why they call it ATM card was because debit card could only work on ATM. There was no POS in Nigeria then. But if you look at today, POS is now something that if you don't have it in your business, you are not doing any business. I can tell you that with time, Nigeria is one of the first to introduce this globally, and the way technology is moving, I can tell you in another 1, 2, 3 years, there will be so many possibilities that eNaira will offer.
Okay, awesome. Let's go to Dr. Nuhu now. We see CBN, even at the retreats that preceded the MPC, or by the committee, they talked about blockchain and that. And a lot of people are asking, the CBN seems to be unfriendly towards cryptocurrency and now seems to be embracing blockchains and CBDCs. Help us to clarify. What's the true picture?
Okay, yes, that's an interesting conversation. And it's also good to note cryptocurrency is not blockchain. So that's a general misconception. Blockchain is a technology on its own, and cryptocurrency is a form of currency that takes advantage of that technology. And if you look at what we've been doing with technology at the bank, CBN is open to innovation. And the way the world is changing, the global digital economy and the future of money itself, we can see a lot of factors pushing for changes. The growth of technology and also cross-border trade, as Daniel has mentioned. So the use of blockchain gives you the ability to harness this technology to improve people's lives, make trade and business easy, and also move people from the informal sector of the economy to the formal sector of the economy. And that has its own advantages. You can increase remittance of taxes. You can get data, like you mentioned, big data and all technologies from these type of platforms that help you make decisions, data-driven decisions for SMEs, for different businesses. And just as you've mentioned in the meeting yesterday, the decisions were made based on data. So this is a technology the CBN has embraced, and beyond embracing, it's actually encouraging this technology, because a key factor here is our partnering with AFF.
Yeah.
Yeah.
So tell us about this hackathon and the prizes that you have for winners.
Okay, so a hackathon is an event that brings about innovators together to solve societal problems, business problems, and you have different type of hackathons. You have open hackathons, closed hackathons, and what we're doing with AFF is to leave it open. We've identified some key areas where problems, we need solution to problems, but we'll also let it open so that people can innovate.
What are some of those areas? It's interesting to know.
Yes, some of these areas have to do with financial inclusion, international remittances, cross-border trade, and also disbursement of welfare by the government, just like all these social investment programs. These are a few of many. And we've also let it open so that these innovators can also give us ideas from the crowd. In terms of prizes, the first prize will get 5 million eNaira, second prize 3 million eNaira, third prize 2 million eNaira, and the next 10 people will get 1 million eNaira each.
Interesting. So, AFF, tell us what's your role and how you are bringing this to the people.
Okay, thank you. I think I will buttress more a little bit about Dr. Nuhu's. So let me speak about how AFF is bringing this into reality. From the original key pillars of AFF, it's an organization designed to work with innovators, identify startups, accelerate them into a commercially viable businesses. And when you look at the economic outlook in terms of startups in Nigeria, there seems to be some diversity between the way they see the regulators. I mean, and unfortunately, you need regulators to keep the balance on track. So the role of AFF here is to bring in the startups, bring in the innovators, bring the regulators. We all sit down together, create innovative products, create solutions that will solve critical problems, and the post, beyond giving the 5 million, 2 million, 1 million, the post-hackathon is how we are now going to work with them from their ideation, innovation to become a global business. And if you look at when we talk about the likes of the United States today, one thing that is going on well for this kind of country is that they have a structured startup bill. The Googles of this world, the Facebook of this world, the Amazon, the Microsoft, these are businesses that came from people's idea and have gained so much value that is even bigger than the entire GDP of Africa. When you look at Google's revenue in 2019, it's about $169 billion, which is more than what we earn in terms of oil. So one of the things we are looking at is how do we see these startups increasing, contributing a very big chunk to the GDP of our country? How can they, how can they bring in solutions that will improve employment, and how can they solve problems? And you know, a lot of us have asked so many questions that where are our forefathers in the first and second industrial revolution? So we don't want our next generation to ask this question, that where were we when in the fourth industrial revolution?
But how do people participate in all of this?
Well, the portal has been opened for like
about... Is it a website? Do you have a website?
Yeah,
do you have phone number?
Yeah, there is a website that is open, is AFFCBNARC.com.
And do you spell the ARC?
H-A-C-K.
H-A-C-A-K.
H-A-C-K, yeah.
Okay, so AFFCBNARC.com. That's how people can get more information.
Absolutely.
And participate in this.
Absolutely. We've received over 3,000 applications, which is, I mean, which is huge. And we are still sorting the applications. And if you see the ideas that people are bringing up, it shows that when you give opportunity to these startups, these Nigerians, they have interesting ideas. And if you're able to bring in 10 viable businesses out of this year, imagine if we do this every year, what this will contribute into the GDP.
And imagine the unemployment that will be mopped out of,
absolutely.
That space. Thank you so much. Daniel Awe, Head, Africa FinTech Foundry, and of course, Dr. Nuhu Khalifa, an officer with the IT department of the Central Bank of Nigeria. Thank you so much for sharing your thoughts, and we do wish you the very best, and of course, wish the startups who are going to participate the very best.
Thank you for having us.
Thank you for having us, Ini. Good to be here.
Good to have you. So we'll take a break now. We do have our plates very full. Today, we have AFEX standing by, commodities market. That's next after the break. This is Business Morning on Channels Television. It's AFEX time on Business Morning here on Channels Television. Well, let's get a sense of the activities on the AFEX exchange for the week ended July the 18th. When the number of deals increased by almost 50%. We have Grace Abikoye joining us from our Abuja studio. She's the Strategy and Corporate Finance Intern with AFEX. Hi, Grace. Good morning.
Hi, Ini. Thanks for having me. Good morning.
Good to have you, Grace. So give us a rundown of the market activities.
Okay. So we saw significant changes in our indicators in the commodity markets. For total turnover, there was a decline of 35.06%, closing the total turnover at 42 million naira. And for the number of volumes traded, there was a decline of 10.08%, closing the contracts at 1.7 million. And for the number of deals, there was a significant surge by over 49%, closing the number of deals at 460. For the ACI, which is the AFEX Commodity Index, there was a slight decline by 1.26%, closing it at 462.32. And for the AFEX Export Index, which is the AEI, there was an increase of 2.25%, closing it at 194.84. Moving on to the volume of contracts traded across the exchange, we saw that maize and paddy rice accounted for bulk of the trades. However, there was a decline in the volume of contracts for maize and for sorghum. And for opposite this would be paddy rice and also cashew, cocoa. Yeah, and then so going into a deep dive into the price performances for the commodities, maize was the only gainer, and this gained by over 3%. At a value of 7 naira and closing at 227 naira 31 kobo. For paddy rice, there was a decline by 11%, by over 11%, and closing at 247 naira 81 kobo. And okay, so for soybean follows suit with paddy rice. There was a decline of about 3%, closing soybean at 407 naira 31 kobo. For other commodities traded on the exchange, including cashew, ginger, and cocoa, there was the prices remained the same from the previous week. So this is just like a run through of all the occurrences in the commodities markets in the past week. And for more information, you can go visit our website, which is africanexchange.com, and also follow us on our social media platforms, which is Afex Nigeria and Commerce by Afex.
All right, Grace, thank you so much for that rundown on the market. Let's take the conversation further now with Afex. And Afex is leveraging technology to drive sustainability in the cocoa value chain. But we have to discuss that. Here in the studio in Lagos, we have Professor Peter Aikpopodion. He is a crop improvement and value chain development specialist. He's here in the Lagos studio. Prof, good to have you in the studio. Good morning.
Good morning. Thank you for having me.
Great. And then back there in Abuja, we have the Vice President's Commercials of Afex, Mr. Debajoti Batachaya, joining us from Abuja.
Hi,
okay,
good
Prof.
morning.
Awesome. Prof, let's start with you now. We see that cocoa is gaining some attention. It's a cash crop in Nigeria. It seems to be gaining attention. How do you think Afex can promote the sustainability of the value chain, adding value to this crop?
Thank you very much. It's a right point you mentioned, talking about the importance of cocoa. I'll just give you some stats for you to appreciate why cocoa is really important. Last year, Nigeria had the record export earning, agricultural export earning of about 505 billion naira last year. And of this, cocoa alone contributed about 42% of that earning. Cocoa is the number one, the largest foreign exchange earning agricultural commodity product after oil. So that tells you the importance of cocoa. I mean, a commodity contributes 42% of what we earn, forex. And you know the situation right now, how we need to earn foreign exchange to deal with the economic situation and balance our trade. That tells you the importance of cocoa. And Afex is investing in this to support the production, to grow the volume of what we produce in Nigeria. If I can also tell you, Nigeria, actually, with the little volume of cocoa we make, about 300,000 metric tons, we're falling way back, really, behind Cote d'Ivoire, that makes about over 2 million metric tons. Ghana they had a record crop last year, 1.05 metric tons, and Nigeria is doing about 300. And you tell me, if Nigeria can be doing 300, and cocoa accounts for about more than 40% of our earning, that tells you if we're able to even double that, to even just 600,000 metric tons. That is the amount of forex we can earn. So that makes cocoa really important.
Right.
Now, it becomes a responsibility for Afex as a player, a soft commodity trading company, to really invest in the sustainability of that commodity crop.
All right, let's go to Mr. Batachaya now to tell us how Afex is really leveraging technology in this value chain.
Yeah, so the major reason that Afex exists is to provide two things. Number one is market access to the farmers, and number two, to give them a fair living income. There are different ways of doing this, and Afex has chosen the way of using technology. What we do is that we have a complete traceable solution right from the farm gate to the farms and then to the entire warehousing structure right till the time it reaches the final processor either in Nigeria or in Europe or in the US or in the Southeast Asian markets. So we can actually trace a bag from the farmer level, including the time it was produced, the time it was shipped out, and the kind of quality parameters that has been throughout the value chain. So it provides not just traceability, but also transparency. On top of that, the farmer is able to use our workbench solution to not just look at his accounts, but actually trade the cocoa beans directly to the processor. So once the cocoa beans are accepted at our warehouse, an e-warehouse receipt is raised, the farmer then has the opportunity to take a call within the certain time period to trade that cocoa beans directly to the buyer on the other side. So we are not just enabling the farmer to bring the cocoa beans and deliver it, we're also enabling the farmer to understand what is it that the final processor reads and then get paid the fair price for it. So once that starts happening, we feel that the entire market of Nigeria will evolve and get better with time in terms of quality perceptions, in terms of credibility perceptions, and finally in terms of delivery perceptions that today has clouded the market. The potential for Nigerian cocoa is not just limited to 600,000 tons. The potential for Nigerian cocoa in our respects, with the kind of arable land that we have, is closer to 2 million metric tons. But yes, it will take us some time to get there.
Yeah, because I can tell you that Nigerians are kind of tired of hearing about potentials that have not been realized. But how do you see your processes impacting farmers and other value chain players?
So one of the things that we started doing in FX is to start providing them transparent prices, which means that initially a farmer had to look at an exchange market price and calculate basis that what they would get if they were delivered to a certain exporter or a certain trader. And there would be significant gaps in the terminal market prices in New York or London compared to what pricing in Nigeria looks like. This translation was not very clear. With the commodity being traded in Naira on the Nigerian COMEX platform, the farmer now has access to that market price, on a daily basis, on a minute-to-minute basis. So that creates the trust and the transparency. The second side of the business is that we are investing into high-yielding cocoa varieties with Professor Peter, in fact. And we have committed to delivering 1 million saplings every year for the foreseeable future. So we started that activity this year. We have already distributed close to 250,000 saplings. And before the end of December, we would be distributing the rest of the 750,000 saplings across the Nigerian space. So these are donations, these are not paid for. So when we do that and we make sure that 60% to 70% of these donated saplings are actually planted on ground and then developed into the hybrid high-yielding varieties over the next 15 to 24 months, we see that we are trying to give back income to the farmer who has lost this opportunity in the past. And that starts the relationship building process for Afex. On top of that, we have certification programs with direct buyers and direct processors. So we trade their cocoa beans, which finally gets made into cocoa butter, cocoa powder, and even chocolate. And the farmer has complete understanding of where his product is going. And if the farmer from Nigeria goes to a US market, we look forward to a day soon enough where he would be able to see, or she would be able to see, that it is his or her cocoa beans which have contributed to making that product.
All right, time is really against us, Mr. Debajoti Batachaya. But just before we go, Prof, just a word or two. You mentioned your name about this, the sampling and the seedlings. How has that been going? How impactful? And how has it reached the people really down there?
Right now, like you said, we are on the 1 million cocoa tree seedling for farmers. And this year, we have done over 200,000, as you mentioned. What we've done is we look at the producing areas, the production hub you have on those states, Osun State, and in Cross River State. And within each of the states, those are the area, for example, in Ondo State, Idonre area, Ondo East, and all that. So we have nurseries situated close to the people where they get this material. And these materials aren't just any material. They are material that have been developed developed by the Cocoa Research Institute of Nigeria. They are high-yielding materials, early maturing, and gives very high yield, more than 2.53 thousand tons, 3 tons per hectare. And these are being done right now, and it's being distributed.
And it's being distributed free, according to what he said.
Absolutely. I was on the field just yesterday, day before yesterday at Ilesha, Ikmerindo, precisely, where we saw farmers on the field. We're really happy. You needed to see their face, really happy that they've not had it like this before.
All right, so we'll certainly be waiting for the harvest.
Absolutely.
And of course, the addition in the value chain before it is being exported. I think that's what we're really missing out. Well, thank you so much, Professor Peter Aikpopodion, Crop Improvement and Value Chain Development Specialist working with AFEX.
Absolutely.
And also the Vice President Commercials of AFEX, Mr. Debajoti Batachaya, joined in from our Abuja studio. That's AFEX time. Let's take a breather. We'll be back. You're welcome back. You're still watching Business Morning here on Channels Television. Well, it seems to be a period of high inflation in Nigeria, in the UK, in Germany, in the US, everywhere. We just hope this is not permanent. UK inflation has overtaken that of the US now. It's at 9.4%, getting very close to that double digits that economists have been talking about. We have Juliana joining us from our London studios now. Hi, Juliana. Good morning.
Good morning, Annie.
Yeah, so I know we've been talking about the double digit and we're getting really close to that. What are economists saying that the government should be doing or what could be done at a time like this?
Well, it's a good question, but I suppose this is really in the hands of the Bank of England, and we know that they're pretty much divorced from the government. The Conservative government, under the former Chancellor Rishi Sunak, has tried to provide what they would say is enough support for beleaguered families, but it's just not going enough. As you said, data released by the Office for National Statistics earlier today has shown that yet again, inflation in this country has reached a fresh 40-year high of 9.4%. It was 9.1% in May. Lots of economists had kind of priced in 9.3%, but it's above that. And as you said, that double digit, which has been a forecast for the Bank of England, is ever much closer. We are expecting energy bills to rise again in October. So that 11% that nobody wants to see is likely to come in the next couple of months. And unfortunately, you were talking about when is this going to abate. According to some experts, we won't expect inflation in this country to drop to that 2% benchmark until the middle of 2024, so that's 2 years. In terms of the upward pressure, I think it's pretty obvious, isn't it? It's food and fuel. I remember last month a barrel of Brent crude at one point was pushing about $120 per barrel, and this was triggered when the EU decided that they would start phasing out a ban on Russian oil imports. So it is going to get tougher. If you ask most ordinary people on the street, 9.4% doesn't really feel like that. It feels like 50% in some places. And as I was saying, it comes at a time where Britain is going through the worst cost of a living crisis in a generation. And, which is a really important point, we have the highest rate of inflation in all G7 nations.
Yeah, not a good one, Juliana. But I guess it's the way of the world at this time. But in spite of this, Amazon is still making profits. And they've been handed £1 million tax credit as profits surged 60%. Wow.
Amazon are doing incredibly well in the UK. As you said, they've just updated their operating trade for the United Kingdom, and for the first time ever it's gone above £23 billion. So this is profit, which is an extraordinary amount. And yes, they have handed over a lot of tax to the Treasury, I believe at about £643 million. And if you look at that 2021 figure compared to 2020, it was about £493 million. There is a huge discussion ongoing at the moment among amongst Europe versus Silicon Valley-based tech titans, because they do want them to pay more. You know, they've earned so much during the pandemic that it's only right that they give back. And Amazon have said in this update, look, we are giving back. Not only do we have a 70,000 strong workforce in the UK, we've invested over £11 billion in the United Kingdom. This is because they've been building so many warehouses, and now a string of Amazon Fresh stores are opening up where you don't have to go in with any cash. As long as you're a Prime member, you can kind of scan your groceries. And so a decent story for them. They are paying their tax, and according to this update, they are going to be hiring an extra 5,000 people in the UK. So they would soon become one of the biggest private sector employers in this country. Definitely something that they can pat themselves on the back for.
Yeah, well, a little bit of sunshine in the midst of everything, like Juliana, I guess.
We don't need any more sunshine, Ine.
Oh, I shouldn't have said that.
Not here. No.
All right, Juliana, I'll talk to you at 1:30. All right, Laddie, well, I hope you need a bit of sunshine, because Juliana almost chopped my head off there, calling for sunshine in the UK at this time.
Exactly. Well, there's sunshine in the crypto market, a little bit of sunshine there. We're seeing, green market this morning, with extreme fear inching downward at this point. We're seeing 31 points, so it's getting closer to greed, at this point, and the market likes greed. That means everything is, getting really high, and traders are making money at this point. And looking at the market cap there, we're seeing we're holding on to that $1 trillion market cap there. It's up 4.93%, and we see volume traded $130.59 billion, up about 20.45%. And we see Bitcoin dominance there sitting at 41.24%. Price of Bitcoin this morning, $23,749. It did break that $23,000 resistance. It was the 22,000 first, then it broke the 23K. So traders are looking up for more upside at this point, but there's still caution, in this market right now, because it's still quite volatile. Volume traded in Bitcoin, $47.30 billion, and Ethereum, they're holding on to that $1,500 mark there, up 0.13% this morning. Volume traded $22.37 billion. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
The sunshine in the crypto markets today.
Hello, Olumide, can you hear me?
Yeah,
yes, so Olumide, yeah, the market is looking quite green. We're seeing the $1 trillion mark taking back at this point. How are you seeing the market? Is it out of the woods yet?
Yeah, it's looking more like a sunshine. It's looking more like the crypto market is having its bottom being sorted out. But, despite the fact that we saw major crypto lenders filing for bankruptcy, they're seeing green adoption, especially from key names. PNB Paribas recently announced that they will be accepting Bitcoin and crypto, offering crypto custody services. This is an entity that has trillions of dollars. We are also seeing major investors coming to the market as the dollar seems to be moderating from its record high on concerns that the US Fed might not go extreme. But, having said all these things, it's very important to know that the Ethereum merge is also boosting. Ethereum is moving from the proof of work protocol to proof of stake. That also is giving environmental concerns much more excitement. So I think it's a very good step, but downside risks still remain, Ladi.
Yeah, there's still downside risk. That's why I said, most of these traders are still, quite cautious in this market. But at the end of the day, nobody wants to get left behind if this is, the bulls, back in at this point. But another news that we see Dubai Crown Prince has laid out a metaverse strategy for the country. How's that supposed to work?
Well, I think looking at the future, virtual reality and the fact of augmentative functionality across many markets is really the key. One would expect a country that is heavily known for energy, the UAE. So I think this is not a surprise, and they are really partnering with major players in the industry to bring in this technology. We're already seeing the likes of Facebook having to change their brand name to Meta for the exposing that reality.
Right, and we know we had the MPC decision yesterday. Were there any sound bites about crypto that, caught your attention?
Yeah, apart from the 100 basis point hike by the Monetary Policy Council, we saw the fact that they mentioned the eNaira. The Apex Bank governor particularly highlighted the fact that one of the moderations in the gains of the eNaira was partly because of the banks. The banks have refused to play their bidding. You know, the banks are supposed to market the eNaira adoption. And the reasons is because they feel like the eNaira might take into their earnings, and that seems to be very true. But having said that, we saw an exciting report also that the eNaira will partner with Nigeria's leading telecom, that's MTN Nigeria. That's to boost in the unbanked. And you know what that means, because MTN has one of the leading coverage in Africa's largest economy, and that practically could boost the eNaira adoption the country so much needs.
Right. Well, we'll be watching out and seeing how adoption grows for eNaira at this point. Thank you so much, Olumide.
Yeah, thank you.
Yeah, so as I said, it's a green market. We're seeing it's mostly green, you know, the top also market cap, and we're seeing double-digit gains here with Waves there leading the counter up 21%, and Engine Coin, one of the metaverse tokens there, 64 cents, up 16.33%. So it's a green market.
Yeah, it's been green since over the weekend.
Yeah, it's been quite green. A little breather for traders at this point, even though it's still extreme fear.
Yeah. All right, Ladi, thank you so much. And I know we still have a lot to talk about, follow up on the MPC decision.
Exactly.
Yesterday. Thanks a lot. And that's it on the program today. Thank you so much for being a part of it. We have another one tomorrow. It's going to be a fresh episode. If you want to know what to talk about, join us by then. But 1:30 will bring you update from the world of business. That will be on Business Incorporated. I'm Ini John Mekwa. Enjoy the rest of your day.